Good afternoon and welcome to NYFP. Today we'll take a quick break from taking a look at tapering expectations as well as the markets. Joining me now is Alan Valdes of DME Securities. Good afternoon, Alan. Thank you so much for joining me.
Remy, thanks for having me.
Well, it is a summer August month, so we will continue to watch volatility. And given that there's so many expectations regarding the Fed, I do want to take a break and talk about what we're seeing in ADRs. So first and foremost, for a viewing audience, could you tell us about some of the trends you're watching?
Well, you know what? The ADR trend, I'll be honest with you, the ADR industry is a mess out there right now. It's just... You know, it's such in flux right now. We could have 10,000 more companies listed down here on the New York Stock Exchange. I mean, but you know, they don't want it. They want to get paid, and the banks are just nitpicking, and it's a total mess out there. Some of the banks allegedly are diluting shares of ADRs listed here, so the public doesn't know it for decades. So basically it's a mess, and they really have to straighten out that industry, because we could have a lot more volume down here if we had that ADR industry fixed up. And it's a shame it's just going to waste out there right now.
Well, Alan, when we talk about trading volume here at the New York Stock Exchange, we're talking about what we're seeing mostly in the equity markets. But what is the relationship between what we're seeing in terms of volume for stock trading and what we're seeing from the ADRs?
Well, you know, a big relationship. I mean, obviously, the ADRs do trade. I mean, they're not as big as liquidity as say, General Motors or Ford, something like that. But it is a volume. And if you pick up another 3,000 or 4,000 ADRs, that really exponentially raises the volume down here. And it is a good marketplace to be in, the ADRs, but they have to fix the industry. It is a mess. I don't like the fact that allegedly they dilute shares and the public doesn't know it for decades. So it's like the U.S. Treasury printing money. I mean, they print money. How much is your dollar going to be worth 5 years from now? You know, and that's basically what happens with these ADR shares. It's unbeknownst to the public, could go on for decades before they even know it, before they actually tell the people. So that's a problem going forward. But you know, they can clean it up. They can really get on it, and I hope they do address that problem, because it'll bring back a lot of volume to the New York Stock Exchange.
And Alan, when it comes to regulations, depending on who you ask, if you're speaking to someone on Wall Street as opposed to someone down in D.C., they're going to have different opinions in terms of how much regulation is enough and how much is too much. So what are some suggestions that you have regarding ADRs?
Well, you know, I think the main thing is to be totally transparent, so people know what's going on. Make it easier for the ADRs to list. Right now, you know, banks will pay certain ADRs to list. I mean, at the end of the day, the ADRs want to get paid to list their merchandise. But you know, like I said, it's not equal and distributed. So it's kind of very convoluted out there. So you want to get an even playing field for all the ADRs. You want to make it easier for them to list. Make it more transparent at the end of the day for the ADR, for the shareholder looking into it. If you think you have 1 million shares outstanding, when all of a sudden you find out you have 3 million shares outstanding 2 years from now, and that hurts the confidence of the market. And that's the big thing. You want that confidence, because on any given day, the ebb and flow of this marketplace is all about confidence. So if you buy an ADR, you want to know what you're getting. You want to know the shares outstanding. That, to me, is the key point. You need that transparency. You want to know what's out there.
And while we're talking regulation as well as transparency, I do want to bring up taxes. I do know that you brought this up to me prior to speaking on air, but regarding the depository banks for these ADRs, what is their tax structure and how does that work, especially for the foreign corporations?
Well, you know, especially for the foreign corporation, a lot of these depository banks have not been booking them correctly, it seems, and that's a big problem. It's hundreds, it's billions of dollars in lost tax revenue for America. So I think you're going to see the IRS looking into this more closely. Before it was like a commission, now they're changing that. So basically they want to get their tax dollars. So I think you're going to see a big change in the way the ADRs are handled from the IRS point of view going forward, and rightly so. I mean, the banks have been getting away with it for quite a long time here, and it's about time, you know, America gets its taxes.
Okay, Annalyn, well, thank you so much for joining me today, and thank you for shedding some light on the ADR industry.
Thanks, Remy.